It is. It has us up here. We're set. You're live. Okay.
This is episode 32 of the New Barbarians podcast. Today is Wednesday, August 13th, 2025. The podcast will hit platforms later today. Today's guest is Loren Asmus, head of capital formation at UTXO Management. As our show notes indicated, Loren is bilingual. He speaks to both traditional investments, the TradFi crowd, and the digital native Bitcoin maxi. Loren was in Bitcoin before the ETFs and the slew of executive orders. He knows why institutions aren't just thinking about Bitcoin, they're actually moving in. He's a former institutional consultant, and today we will discuss why pensions and endowments are exploring Bitcoin now, the playbook for bringing TradFi capital into the digital asset space, and what counting the UTXOs really means in the world of large-scale Bitcoin strategy. And with that, I will pass it off to Mark to talk about the macro backdrop and recent performance.
Thanks, Bill. And Loren, I am lobbing that UTXO one right to you.
Well, yes, that's we're gonna get right into the weeds, I guess, right, on what UTXOs are. But no, thank you, Bill, Mark, for having me. Really excited to be here today.
Good. Well, we're going to jump in here. Yeah, we are going to come back to that. And it's almost like that show. I can name that tune in two notes, in three notes, two notes. How quickly can you describe what a UTXO is? That's for later, folks. Today, we always kick this off with our markets scorecard. Who's in the lead? Who's lagging? And what you're looking at is several $100 trillion of investable assets globally: Bitcoin, gold, credit, sovereign debt, U.S. and foreign equities, the U.S. dollar, and then oil. So on the year, again, you have the two assets that preserve capital the best. We'll talk about why in a minute. Bitcoin slightly ahead of gold at 28%. And then here's the part where, Loren, we in Bitcoin talk about how no one knows what money is. We just assume it. It's like that, the two fish swim by the old fish, and the old fish guy says, "Hey, boys, how's the water?" And the fish say, "What's water?" That's like basically how we are in the U.S. with money. We don't even know how it works. Well, this is how it works. The EFA index, which is non-U.S., non-North American equities, think of Asia and Europe, and it's up 23%, but 10% of that is from currency. Their currencies are 10% up against the dollar. So they are locally denominated. So you made 23% if you bought this, but 10% is down here. It's because the US dollar is down. So this is the first time we've had this type of move since 1973. So if you're looking at data from last week or last month, you may want to step back and take a book off a bookshelf, because newspapers aren't going to get you through this market. Things are happening that we haven't seen in decades. And this year-to-date chart shows it. Show me the last time you saw gold and something called Bitcoin leading everything together. And then we talk about persistence, where Bitcoin and gold are, again, on a 5-year basis, leading all. On a 5-year basis. I'm sorry, on a 1-year basis, and a 5-year basis, and 10-year, we know Bitcoin leads all. But we don't invest in global assets. People, because we have investment managers, we love to be invested in the Mag 7. And here, let's look at Mag 7 plus Bitcoin, and then the upstart, which is going to lead us into conversation with Loren, MicroStrategy, MSTR, now called Strategy. On a 1-year basis, MicroStrategy has doubled, more than doubled, up 200%. Bitcoin is up 100%. And then Tesla and NVIDIA. Tesla's, back from the dead, I guess. Elon's not the devil anymore. People are buying his cars. Good for him. But look at a 5-year basis. MicroStrategy was like 5 years ago was nothing. It was like $1 billion enterprise value before he came on the scene and started buying Bitcoin. It's averaged 100% compounded gains every year for 5 years on average, even better than Bitcoin, which is why Loren's here to talk about what he thinks the next opportunity is. And then Bill, to give us and what we do for a living, a shout out over the last 5 years and over the last 10 years, what are the two largest major asset classes that have done well? NVIDIA, because they rolled software into hardware to take advantage of AI. Behind Bill, there should be a screen that says, I'm the AI guy. And then Bitcoin, again, persistent like the tide, keep coming at you. So that's, anytime anyone says, I'm not sure, I'm like, okay, great. Have an answer about when and why this will stop. So as far as the when and why this will stop.
Sorry to interrupt, Mark, but that last slide, this may be a good time to talk about Bitcoin maxis and, MicroStrategy is a good performer, but what about BitMine?
Oh, dude, were you waiting to roll that under my feet, you dirty dog?
No, it just occurred to me that I did
see what I got to deal with,
article.
Lauren, see what I got to deal with here.
I did read an article about the treasury companies expanding into things beyond Bitcoin.
Yep. Yep.
And I have a view on that too. We can definitely dig into that.
All right. Well, maybe we'll leave that for later. But yeah, I think that the quick answer is, Ethereum and some of the other coins are now following a similar growth story to Bitcoin through MicroStrategy and all of the Bitcoin treasury companies.
Yes, the playbook's being adopted, as you said, Bill, and props to Tom Lee. He's at Fundstrat, I think. He's been early and right on Bitcoin, and he's obviously behind BitMine, I'm pretty sure, Loren, right? He's the, $5 million now. They're raising what, a couple billion, 20 billion. It's bananas. So as far as we were talking before everyone joined here live, and Bill was talking. There's a lot going on. CPI came out yesterday, Tuesday. Core was higher, but headline was lower. People decided to look at headline because it's a better number. So we're now going to have, Bill, what was it? The expected rate cut in September?
Yeah, I saw 50 basis points projected for September. So not just 2025, but very soon. And let me look.
You pull that up, and then I was looking at the Fed Fund futures, which are somewhere between 25 and 50 for September. And, the 2 years done that. The 10 years still elevated, which means the market thinks there's inflation. The front end's coming down. So there's a 2-year, 10-year spread that's at, pretty 5-year, 10-year wides now. So the market does think we're going to do it, whether we need it or not, whether inflation is the main objective, or is it to reduce our interest expense, which is about 25% of, every revenue dollar, which is only going to grow as low cost debt rolls off. So as Bill looks that up, it's going to hit this last one. Fellow Bitcoiner and a guy I've known for years, James Lavish, put out yesterday that the federal debt ticked up to that nice fat 37.0 trillion number yesterday, as of, I think, Friday the 11th or Monday the 11th. And I was looking for that. I was watching it because it was 96.98. This is what I do for my spare time, Loren. And I was looking at it every day it comes up, and I missed it. And James obviously stayed on it. He probably has a better handle on the exact time it's released. And the period between July 3rd, when the debt ceiling was released to help fund the one beautiful big bill, whatever it's called, between July 3rd, when that 6-month flat 36.2 trillion in debt was, the debt ceiling kept debt flat for that 6-month period, first half of 2025. It was released between that moment on July 3rd and today, or on Monday. Debt has grown annualized at 20% over that 5-6 week period. And if you go back 5 years, it's something like 8.5, 9%. So we're growing debt at an increasing rate and we expect it to be over 50 trillion by 2029. So that's what this is. I don't care about CPI, Bill, when you were bringing it up, and why are people 50-25? Who cares about the price of money? The supply of money is going to keep coming hard and strong. So that's all.
So yeah, I think the real point was just that we have these contradictory signals between inflation up and then a rate cut coming so soon. And yeah,
Yes.
thank you for explaining the speculative reasons why. I forget it, it was one of the big asset managers or banks that were calling for that. I believe I deleted the Bloomberg update from this morning already, so I can't find it easily. But
it's everyone, was it Marcus Aurelius said, once the populace finds out where the treasury resides, they walk by every day with their hand out. And you have guys like Mohamed Alarian saying that Powell should step down so that it's not deemed to be a politically oriented office. Like, his logic was just crazy, weird. Like, everybody is incentivized to have lower front end rates. Investors, governments, everybody, unless you don't own assets and you're a wage earner. So that's where, you guys come in, Loren, on the investment side, saying to people that the old systems failed everybody. Our incentive structures are upside down. Guys my age, we used to talk about it. We're like cats hanging on the ceiling, man, holding on to our jobs and our coupons. Because we know that if we leave that job, the chances of us getting another job that pays as much as a bank does are like zero. It is a trapped system of opportunity. So that's, Bill, why it's almost like a game of distraction, focusing on, which you bring up appropriately, about why is this happening? Why is a guy calling for 50 and other people aren't? The inflation's there, as you noted, and the reason is because everyone's just like, we're in the game together and we got to get rates lower.
And I did skip over the performance across quant land, so I'll just quickly update on that. I'm doing a bit of research on July with performance in quant land. The short leg of short interest rallied a lot, and there are some interesting articles about how it's very similar to the meme stock rallies in the past with short squeezes, but it's more of a pervasive thing. So more to come on that, and if I figure it out, I honestly don't know if I'd want to share it, because it seems like the type of thing you'd really want to keep to yourself in like a trading strategy, because like looking across factors, you go long the top quintile and short the bottom quintile. So the bottom quintile of short interest rallied, and it wasn't like GameStop and Krispy Kreme. It was many names at once, and so rather than a Reddit forum or even day trader driven short squeeze, it looks like it could be more than that. And if there was a smart institution out there that trades very fast or something, that might be a source for this type of thing. But good for whomever has profited from that, and hopefully people aren't going to hold on to these like really crappy stocks too long that have rallied, because they'll presumably fall back to earth.
So Bill, you mentioned that that's not the Reddit room banter, the Wall Street Bets folks, that it's broader than just the donuts and the moons and whatever else the Robinhood guys and gals are trading. So is it like just name, what, like, is it highly indebted names that aren't cool to short, or?
Yeah. So if you looked at the most heavily shorted stocks that some of the big investment banks highlight, and the roadmap is kind of there. if you wanted to like take a bet on stocks that would benefit from a short squeeze. If that makes sense.
Yep. Yeah. We used to call them at Credit Suisse, obviously, we dealt with long short funds. Squeezy. This one feels a little squeezy. And
Yeah, queasy. It makes
that's
the it makes the
yeah.
hedge funds queasy.
Yes,
Um,
that does. And then pukey.
yeah.
And then that's when you, that's the 3-step process. Maybe we'll try to brand that after the call.
Yeah, and so we'll get into the full discussion with Loren in a moment. But over the last month, momentum rallied, volatility is rallying today, and has over the last month. Reversal as well, which I think reflects that momentum and reversal have been kind of bouncing around. And then dividend yield is down, and that's related to interest rates, presumably sensitivity to oil price down, value down, although it took a bounce on Monday, and then sensitivity to inflation down. So certainly a macro driven like rally in the stock market, like we're seeing, all-time highs. And I believe risk is on, and rate cuts will only make risk go on more. And I'm sure that if it hasn't become very clear, Mark and I are pretty bullish on Bitcoin and assets that should benefit from this backdrop.
That's fair to say, Bill.
So enough out of me. Let's talk to Loren more.
All right, Loren. So where do you want to jump in here on the firm, or your background? We met a year ago, and as I said, you're bilingual. Maybe talk about how you ended up here.
Yeah, and maybe just to tie a bow on everything you both just talked about, Bitcoin has been the best performing asset 13 of the last 16 years, including this year. So 3 years of terrible performance, but 13 years of the best performance relative to other asset classes. So I just wanted to put that out there. But in terms of my background, so I'm Loren Asmus. I lead our capital formation investor relations at UTXO Management. We're a global asset manager focused solely on the Bitcoin ecosystem and investing in the growth of the Bitcoin space. I formerly came from an institutional investment consulting firm out in California, where we advise on roughly $50 billion worth of assets for endowments, foundations, and families. And I sat on the research side. So I allocated and invested in money managers, asset managers across hedge funds, credit, and then to a smaller extent, digital assets and Bitcoin. And so I personally got involved. I think Mark mentioned it at the onset. I personally got involved in Bitcoin during the 2016, 2017 cycle. It was a very different story back then in terms of bringing it forth to institutional investors. If I would have brought it forward to our leadership at Canterbury, I probably would have gotten laughed out of the conference room at that time. But fast forward to today, 2025, very, very different story. Before I left, we actually approved one of the Bitcoin ETFs. So just goes to show how fast the space can change and how fast institutional adoption can.
How many years between that chuckle and that approval, Loren?
Ooh, that was 6 years.
Wow.
Yeah,
Okay.
6, 7 years.
But
Yeah.
still, yep.
Yep. And so, like I mentioned, it's been really great working with UTXO and our partners. Just to give more background on who we are. So we're the asset management arm of BTC Inc., which is the company that runs the annual Bitcoin conference. We just had our conference in Las Vegas in May, had over 35,000 attendees. We've had political figures, Vice President Vance spoke, several senators, congressmen and women, and then leaders within the Bitcoin space and the investing space as well. We have our upcoming conference in Hong Kong actually in 2 weeks, so preparing for that, and then that will be our big Asia conference. And then we also publish Bitcoin Magazine, and so that's been in publication since 2012, 2013. And that's really where we talk about different subjects of what's happening in the Bitcoin community. And when you combine all that together, effectively we're the largest Bitcoin media outlet that there is.
Yep.
And so we leverage that microphone to help us on the investing side and to build out our relationships and our connections with folks within the industry, and then use that to really try to bring forth good opportunities for our investors.
Fair enough. Yep, you've been there early and often, and I, as a attendee of and a speaker at times at the conference, I can tell you it's worthwhile. And my favorite, Loren, was actually 23 when it was not as exciting, but met great people, and it was a total setup. It just felt like a great setup for what was to come. And you guys were there. You didn't cancel it because it wasn't, Bitcoin 100 grand yet. It was Bitcoin 23,000, down from 60. And you guys, that's the point. You've been there forever, you know, for
Yep.
a decade plus. How long have you been in this space, BTC?
Since 2013.
Yeah.
So 2013, our first conference was in 2019, actually in a parking garage in San Francisco. And so we moved within the span of 6 years from a parking garage in San Francisco to the Venetian Expo Hall in Las Vegas with over 35,000 people. So exponential growth is real, even in the conference space.
Yeah.
Yeah. So happy to take it anywhere we want in terms of just talking more about our investment thesis on Bitcoin, our firm some more, or even we could talk about Bitcoin treasury companies. But Mark, Bill, happy to
Sure.
hear.
I want you to, there's two areas that want to touch on. One is Bitcoin treasuries as a theme. Some call it the ICO craze of this cycle. We said, is it craze or opportunity when we were writing about it? If you can tell people as we go through a slide or two what it is, how it's different than Bitcoin, and who's buying it. That would be great. And then the other part is pulling from your institutional side. How can an institution, because we have a lot of like 28 to 38-year-old direct associates and directors of firms who are the Bitcoin advocates in their firm. The people they roll out when they have to have an answer, but they then put back in the corner because they really don't hear about it. So what has worked in that 6 year, chuckle to adopting that you saw that maybe some of these folks could use tools or processes in their institutions to get the old guard on board? So those two things, but Bitcoin treasury front and center, that is what's going on. And then we'll even talk about Bitmine and the Ethereum approach that Bill mentioned for sure.
Well, maybe to tie in from what we were just talking about, I'll start with your last question first. Just how to think about pitching Bitcoin as a opportunity investment at a traditional firm. I mean, really, you're right, right? The reason why I got involved is because I did the work personally. I did the 100+ hours of research, tried to poke holes in the thesis of Bitcoin. And as we all know, as you go down the rabbit hole, you start to see that there really aren't any holes to poke. And so it's really a matter of relaying that conviction in very, very high level, simple terms for people, because it is a very big departure to go from what we've all known in traditional finance and investment, the CFA, financial advisor mentality, to what is money, what is Bitcoin, what is digital capital. And the way I would put it is, and now what I put it now in many cases is like, look, if you want to just really, really simplify it, I think it's more than this, but if you view Bitcoin as being a digital gold, digital capital, right now it's 1/10 the size of gold. Gold's roughly $20 trillion
Yeah.
market cap. Bitcoin's roughly a little over 2 trillion. I think it's at least a 10x better savings technology store value than what gold is trying to be. And the reason why gold has its value is not because of its use case. It's a very, very, very small piece of it. It's because of the store value narrative and scarce aspects of gold. That's
Yeah.
why the majority of its value. And so just to take a step back, Bitcoin, gold, store value, Bitcoin's for the 21st century, digital rails, easy to move, censorship resistant. That all has value, right? Um, and so it was really just taking a step back and saying, look, just take the narrative here, assume like if you didn't do the work that Bitcoin is going to maintain its absolute scarcity in a decentralized way, that's what gives it value. And yet you can't argue that that can't give it value when you compare it to all the other investment assets that can effectively be devalued or printed or made more of. And so
Yeah.
that's really kind of where I laid the foundation, the framework, and it was just hitting it over and over and over again. People need to hear it multiple times. They need to be talking to other industry insiders on it. They need to just be involved in that. I think that's why our conferences at BTC are so powerful, because you see all the people that are involved, you see the types of people that are involved, and it goes away from being just this magic internet money to being a real tangible thing when you meet people in real life and you speak to other thoughtful people that have
Yeah.
thought through this.
I agree about the time and space, whether it's a meetup in your town or a conference. And everyone is hit by a different feature. You know, someone sees a picture, someone understands the tech part. And I think Bill's going to introduce a couple of questions that will maybe help um, connect more from some of our viewers, Bill.
Yes, I do have a couple of questions, and I did want to just reflect on my usual regret about how late it took me to get into Bitcoin. Like, you talk about conferences. I remember going to the Robinhood conferences for hedge funds back in 2017, maybe even 2016, and like Novogratz and some of those types were presenting on Bitcoin, and I remember at the time people were also talking about Tesla and how people were just betting on Elon, even though Tesla had a bad balance sheet, and like here we are, and I should have listened, and finally did listen to Mark. Yes, thank you, Mark. Um, so yeah, the first question from Techie Toe. Hopefully this is an easy one for you, Loren. What is an institutional consultant?
So institutional consultant is effectively an advisor for large pools of capital. So, endowments, foundations, nonprofits, those could be performing arts institutions, ballet, symphony, healthcare institutions, universities, groups that manage large pools of capital that have perpetual investment vehicles, right? They're not thinking about winding down. They're really thinking about growing it and then using that money to fund grants, fund student tuition, subsidize certain costs for, say, university or for the organization itself. And so these are large groups that are very influential in their own local communities. And our job as a consultant is to come in and advise them on their entire investment portfolio. So equities, fixed income, private equity, private credit, Bitcoin. That's what we do. That's what we do.
And like an example would be, would a CalPERS or a state pension that Techie Toe might live in hire a consultant in order to give them a window onto private equity or infrastructure or digital assets because they don't have the expertise? Is that like
Yep.
an
You
example?
see that. You see pensions in these organizations hiring these consultants for added deal flow from asset managers, certain strategies. A lot of these big groups have in-house folks doing the research and the manager due diligence, but you do see them hiring out consultants to bring in more options for different pools of capital.
And so I've only heard really good things, but what is the relationship with investor relations teams at hedge funds and the consultants?
So they interact one-on-one. So when I sat in the allocator seat at Canterbury, I would interact with the investor relations person first, and they would outline the investment strategy, the firm, the people, philosophy, process. And so it'd be my job in the investor seat to, take notes on all that and then give an opinion and do my own research. And then say you'd have a follow-on meeting with the portfolio manager, the PM. So really the IR person is really the top of the funnel in terms of communicating the value proposition of an investment strategy, working with the client, in that case, the consultant, and making sure that they have everything that they need. And so the PM can focus specifically on the investing and not get tied into too much. It's important to be involved with clients and LPs, but really so they can focus solely on the investing side.
And yeah, I believe some of the IR teams, well, I guess the appropriate way to look at it is they take the consultants very seriously because the consultants do this really good job for the pensions. And ultimately, if you want to get access to certain types of capital, you have to have these good relationships with the consultants, which mean convincing you, the consultant, that it's a good investment for your clients.
Right. And you're really trying to build these long-term relationships. It's not a quick, I'm going to sell you my investment strategy or whatever, and then be gone. It's, developing these multi-year relationships, making sure you're getting them the ad hoc information analysis that they need so that they can make an informed, efficient decision.
Cool. Thank you. You want to continue with a handful more questions, Mark, from the chat?
Yeah, sure. So, yeah, why don't you read them, Bill, because your eyes are better than mine.
So one is just about short squeezes. I like how people are asking for clarifications about terminology. So it's basically, what is a short squeeze? Maybe Mark from the TradFi, and then I think I would love to also talk about this concept in crypto and Bitcoin.
All right, so I'm going to try to do this quickly. The goal of stocks is, of a trader in particular, not an investor, because you don't sell often, right, Loren? Sometimes people buy and they hold forever on those endowments. A trader buys high and sells low. That's what they want to do. I'm sorry, buys low and sells high. That's why I'm not a trader, because I was very bad at it. So you want to buy low and sell high. What happens if you see something that's very high and you think should be low? You're like, darn, I missed it. I should have bought it low. Now it's high, but I don't own it. Well, a person who actually does own the stock. Think of it like a car. It's the analogy I give. If a car just all of a sudden caught a bid, a 68 Camaro, great car, you love it, but it's not worth 120 grand. It got on site and all of a sudden it's worth 120 grand. You're like, that's going to be back down to 30 grand by next week. But you don't own it, so you're out of the trade. Unless your neighbor who owns it, you say, you know what, can I borrow your car for like a week? I'll pay you 10 grand. I'll pay you 10 grand. I just want to borrow for a week. I won't put many miles on it. The guy's like, I know you like my car. I won't drive it. I'm going to actually deposit it in a place where it'll stay. You know the custody person, the garage. All right, fine. Put my car in that garage for a week, pay me 10 grand. And then what you do is you actually sell the car overnight for about a hot second. You sell it, it goes down to 30 grand in 5 minutes. You buy it back, put it back in the garage, none the wiser. You pocket the money and you give the car back to your neighbor. That's what people do with stocks. They borrow stocks for a fee that they don't own. They then sell them, but they have to deliver them back. And if you're wrong as a trader, as you know I was, because I said you should buy stocks high and sell them low, you have to, and you sell it at 130 grand, and then, I don't know, you guys know a big influencer that would make a 68 Camaro go up to 250 grand? Someone comes on and says it's going to go to $1 million. All of a sudden, that Camaro you sold short that you got to deliver next week, it's at 200 grand. And you're like, oh my God, I now have to buy it. So the squeeze is when all of a sudden buyers come in to a stock where dopes like me sold short, thinking it was going to go lower, and now I'm forced to buy it back because I have an obligation to deliver it at a certain period of time.
I like
a B plus?
No, it's
great analogy.
At first I was like, the neighbor, yeah, but this is a very good analogy, and I would add that even though the 68 Camaro,
yeah,
that actually sounds like my dream car, but
I got one for 120 grand, cheap.
Yeah, it sounds like, the one that your neighbor had, they left it out on cinder blocks for a few years, and it's rusted out suspension, actually means it's worth less than 30 grand. But
Got it. Yep.
that's kind of meaningless ultimately if the influencer has made it worth 250 grand. So when I talk about the crappy stocks rallying, that's actually the complete analogy where these are not good investments, but they're flying high, even though they have a rusted out suspension and the car's going to break down on the highway as soon as you drive it.
Bill, I'm going to borrow that footnote you. So it's stocks on blocks.
Yeah, there you go. Cool. And yeah, I'll get back to more of the questions when they come in. But thank you.
Well, would it be great to talk a little bit about Bitcoin treasury companies?
I think that's it. That's front and
Okay.
center. I think we got people salivating for that on the live viewer thing.
Great, great. So, high level, I mean, really what a Bitcoin treasury company is a public entity corporation that is accumulating Bitcoin on its balance sheet and holding it directly. And so MicroStrategy, now known as Strategy, chairman is Michael Saylor. He's been a big Bitcoin evangelist, believer for many, many years now. His firm, his company, Strategy, owns over or approximately 630,000 Bitcoin, which is a little over 3% of the total supply of Bitcoin that will ever be mined. And he's accumulated that over the last 5 years. So he started buying Bitcoin in 2020 and is really turbocharged over the last, say, 18 months, especially. And so the reason why he's been able to accumulate so much Bitcoin is he's leveraging the fact that he's able to access these institutional pools of capital that could not buy Bitcoin for either regulatory reasons, political reasons, just part of their mandate. But these companies, these organizations could buy a company stock, a public equity. And so effectively what he's done is he's securitized Bitcoin into traditional financial markets. So we always talk about, on the other side of it, on general crypto of moving traditional assets to crypto rails or digital assets rails. In effect, of what Saylor has done is moved a digital asset Bitcoin to traditional financial rails vis-a-vis a corporate structure. And so that's a very, very big idea. Effectively what we've done at UTXO is taken that playbook that Saylor has birthed and taken it globally. And so, Mark, I don't know if you have the slides available. We actually did a webinar on this about a month ago, showing just the global adoption of these Bitcoin treasury strategies, really since April of last year is when we first got it started. So our first company that we got involved with was Metaplanet out in Japan. When we first got involved with that company, it was effectively a zombie company, Left for Dead. They were a budget hotel operator in Japan. Really had no good forward-looking prospects. They got crushed by COVID. The CEO, Simon Garovich, he was a former Goldman Sachs derivatives trader, so he had the traditional finance background, but was a Bitcoiner himself personally. He wanted to run the Michael Saylor playbook and do what Strategy did, but in Japan. And so effectively what happened was they started the playbook, they started the flywheel. When we first got involved with the company, it was a $20 million market cap company. Today, they're over 5 billion in market cap with over 18,000 Bitcoin on the balance sheet. So effectively in a year and a half, they went from nothing to 18,000 Bitcoin. And so it just shows that there were local dynamics at play that led to that success. And so
And that's the part I love about this, Loren, and what you guys have done. You not only saw this strategy, you went to the right place because Japan needed that wrapper, and you saw the demand, you saw the regulatory opportunity. And then the last thing I'll say about it, because I have a personal experience with him, is Dylan LeClaire. I mean, Dylan is, he's his same age as some of my kids. And when I met him, I started to appreciate how much he knew about macroeconomics, Bitcoin. He's authentic. He's the real deal. So for people listening about what's going on, I've met someone from your firm, BTC, who went to Metaplanet to help that process. He's authentic. He's genuine. He's smart. And so these are real people incredible that are jumping into the space.
Yeah, absolutely. Dylan's fantastic.
He's
He's
a
been
bomb.
Yeah, he was at BTC Inc. for a while, and then he was at UTXO for a little bit. And we effectively helped place him at Metaplanet, but I mean, it's all his work of him getting that role, and the proof of work that he did as a Bitcoiner and macro expert in many cases. But that was really, I mean, the fact that you had him on the Bitcoin side, coming from a Bitcoin native perspective, Simon, who could kind of do both, was bilingual to your comments earlier. That combo was very, very deadly in terms of just being very, very efficient and aggressive with with spinning up their company out in Japan. I'd
Yeah.
also say Japan itself had many unique characteristics. One, there's no readily available Bitcoin ETF, so very tough to get traditional Bitcoin spot exposure through a brokerage account in Japan. And two, there's a very big tax difference between owning spot Bitcoin in Japan and owning a public equity. It's very more tax disadvantaged to own spot Bitcoin in Japan. And so, because of that tax delta, it was much more efficient for local Japanese investors to own a company stock that was effectively a proxy for Bitcoin.
And Lauren, I experienced that when I was at 3IQ, the demand from Japan. As I mentioned to you earlier, the firm I was at, 3IQ, you guys, UTXO was an early investor in Fred Pai's venture in the Canadian-based uh, Bitcoin and Ethereum fund manager. And they were bought in, I think last year by a Japanese firm looking to get exposure. Again, former Solly and Goldman guys knowing where the puck is going. And they reached out into North America. Whereas I love what Dylan did with you guys is you went into the market and wrapped it in something that could be eaten at every table with tax advantage. Just
Mm-hmm.
phenomenal play.
Yep. Yep. And so this was really our first proof of concept that this can work outside of the US. And so fast forward
Did
to
it did
today,
it did it stop there, Lauren, or is there more?
as
Did
you can
it?
see, it did not stop there from this slide. It's only grown. And so today we've done roughly 15 different um, investments deals across the globe. And there's definitely more coming down the pipeline here over the next 6 to 12 months. And so yeah, this is just a huge idea, right? Bitcoin, it's gone from 0 to 100,000 in price, and then in the first 16 years of its life. And I think in order to get it from 100,000 to many, many millions, multiples from where it's at today, you're going to need corporate adoption, large pools of capital able to access it in an efficient way. And these Bitcoin treasury companies are effectively the pump, or the valve to allow that to happen. And so I believe we have a chart in here, Mark, that illustrates that relative to the global total assets.
Yeah, you want me to do that bond one that we had
Yep,
this?
here it is. Yep, this one.
Great.
And so this is a chart created by Jesse Myers, who's a UTXO strategy advisor, and he works very closely with the Smarter Web Company, which is a UK Bitcoin treasury company. But effectively, what this is showing is the size of the different major asset classes globally, right? So equities, $135 trillion in assets, real estate, 370 trillion, bonds, 318 trillion, so on and so forth. Bitcoin at 2 trillion is very, very small. We think Bitcoin, has grown a lot, and it has, but when you factor a $2 trillion asset relative to a sea of equities, real estate, and fixed income, it's still minuscule. And so effectively, what this chart shows is strategy, MicroStrategy, taking that Bitcoin and releasing it across equities and fixed income. And so, to not get too much into the weeds, but kind of the next phase of what strategy is doing is issuing these preferred equities, which are kind of hybrid securities that are a mix of fixed income and equities, to give a coupon or a yield to investors with less volatility to that of, say, the MicroStrategy stock. And so now what Saylor is effectively doing is tapping into the $300 trillion bond market and offering a potentially compelling product that yields higher than treasuries, other high yield corporate bonds, but is effectively stripping off the volatility of the stock and giving a yield to investors who don't want that volatility, want less of a potential expected return, but want that stability of a high interest payment or high coupon. So
It's
don't want to get too much
awesome.
deep on that,
It
but
it is awesome, and the reason why I think people come to our podcast is to get experts like you and Bill and I, and I scrutinize this up and down, and then I realize, oh, I know what they're doing. They're able to actually harvest the volatility by putting this, as Saylor would say, a nuclear reactor into a inert equity wrapper, and it behaves very differently. The strike, the strife, the even strategy equity than all the other animals in the zoo. All the other stocks don't behave that way. So then people come in and say, "Oh, I can buy the stock and short the bond, the convertible. I can play the calendar options." So, folks, what these people have done, and what Bitcoin treasuries are doing, is taking, as Loren said, this itty bitty $2 trillion nugget, and they're wrapping it in an asset that makes it behave very differently in a market that may not have access to the spot or may not even want access to the spot.
right. And another key aspect, which I forgot to mention, was as a corporation, you could take advantage of a cheaper cost of capital, cheaper financing leverage than an individual can, right? And so these companies are able to issue stock, issue debt, convertible notes in a cost-effective manner to accrete more Bitcoin per share. So effectively, the goal of these treasury companies is to give more Bitcoin per outstanding share for its shareholders, right? That's how you accrete value at the end of the day. So it's thinking in a Bitcoin first mindset, not a fiat or a dollar based mindset. And so as long as these companies are able to accrete what we call accretive dilution, which sounds a little bit like an oxymoron, but it's true, right? So strategy trades at a roughly a 2x MNAV, which means the market value of the company is 2x the price or the value of the underlying Bitcoin NAV. And the reason why the market trades it at a premium is because one, my first point on being able to access pools of capital that could not access Bitcoin that has value, but then two, being able to issue cheap cost of capital to accrue more Bitcoin per share gives it a premium. So you can almost think of it, this is definitely not apples to apples by any means, but you can almost think of it as kind of a PE ratio or a price over its Bitcoin ratio, or like a premium price to book in many ways.
Yeah, I think premium
Not
price of book
technology,
I
but
like a lot. I
yeah,
like that one.
yeah. So obviously these premiums can ebb and flow, the value can ebb and flow. But that's the general gist of why there's been such a Cambrian explosion of this over the last 12 months, and why we think it's going to just continue for the next 10, 20 years.
What's pushback, and who's the most interested of buyers, you think, or or is it just too broad and there's no one pattern?
It's definitely evolved. I think initially there was a lot of companies, groups that wanted to do this strategy all around the globe, and you'd see kind of an initial run up in the price of the stock, and I think that phase of all of this is over. I think if you're going to do this strategy, you need to have a differentiator. You need to be in a differentiated market. You need to have a value prop. I think you need to have at least a operating or a profit neutral business. Your business can't be losing money. Um, and so I think the market has definitely gotten wiser to trying to understand which types of Bitcoin treasury companies are going to succeed in the future and be able to grow in an accretive, efficient way. And so right now it's definitely the gold rush, right? Everyone's just trying to accumulate as much Bitcoin as possible. I think phase two, this is down the road, is eventually these companies are going to use that balance sheet, what we view as pristine collateral, being Bitcoin, to either do more M&A, add more cash flowing business lines to the corporation, new products that we probably haven't even thought of yet, because now you're working off of a Bitcoin standard as a corporation. And so that's phase two. That is probably several years out, but I think that's where this is all headed.
Yeah. Yeah. The collateral, if you had a, my opinion is, I like owning the spot as an individual, so does Sailor, so do all of your Bitcoin treasury companies. And then is there space to own this? And I guess the point is, well, if you own a bond or you own equities, why don't you put a portion of that into a Bitcoin treasury company? It's
Yeah.
I think you're getting more people showing up curious, at least, given that the 10-year bond or the 30-year bond has returned flat to down over the past 5 and 10 years, fully loaded. No one even understands that your money was you've lost money buying treasury bonds. It's just a disaster, and we don't think it's gonna get much better.
Right. In my opinion, I agree with you, Mark. If you're going to own Bitcoin or Bitcoin oriented exposure, owning spot Bitcoin first, I think is very, very prudent and important. Everyone should own spot Bitcoin before they start getting involved with Bitcoin treasury companies, in my opinion. But this is definitely a way to increase either your risk appetite, potential performance appetite. It is in many ways a levered play on Bitcoin, right? Because you're leveraging a corporate balance sheet. You don't have physical control of the Bitcoin yourself. You're relying on a centralized custodian in many cases. These
Mm-hmm.
corporations are. And at the end of the day, it's just a claim on the corporation that you're owning with the stock, right?
Yeah.
It's not a claim on the actual Bitcoin. So,
And I think we could talk a lot about this because I do have more questions. But on the point of spot before Bitcoin treasury companies, I think a lot of investors have retirement accounts and things like that where they can buy equities only. So it seems like the ETF, that was actually my first Bitcoin investment. The ETF and then Bitcoin treasury companies are sort of the proxy for that same. This is not investment advice, but if you want to get into Bitcoin but you don't have access to spot, it seems like the ETF is probably the purest play.
yeah, I mean, it's just a different set of trade-offs across the board, right? The great thing about spot Bitcoin is you actually control that. You hold the keys yourself. You can, no one can tell you what to do with that Bitcoin. You can move it, you can send it to anybody, anywhere in the world, and have final settlement, within 30 minutes. That's very, very powerful. That's important to have. The ETF, I think, are wrappers where you get easy exposure in your brokerage account. It's as simple as logging in, hitting the buy button, and now you got exposure to the price of Bitcoin. You don't own the Bitcoin directly yourself. You don't have control over it. You're relying on a centralized custodian to hold that Bitcoin on your behalf. But you have groups like Fidelity, BlackRock, right? I think the BlackRock ETF has over $70 billion worth of value within their Bitcoin ETF today. And so they're very big institutional players that are involved. That yes, the risk is non-zero that something could happen on the custody side, but these are institutions that have been around for decades and decades that have all the right institutional practices in place. But there is risk there, right? There is centralized risk.
Mm-hmm.
And then the corporations, right? You also have that centralized risk in terms of custody. And then, as I kind of mentioned before, right, you're kind of increasing your risk return potential based on the volatility, based on the execution risk of these companies growing Bitcoin per share. And so that's kind of farther down the risk spectrum. But it's just a set of trade-offs that depends on your personal situation.
And then getting into the risk, you mentioned leverage Bitcoin. And on the previous note about shorting, like what is the risk to these Bitcoin treasury companies? Maybe in the U.S. in particular, but yeah, like it seems like their biggest risk is probably that the price of Bitcoin goes down. But what does the risk profile look like, and what would an investor use to evaluate them?
Yeah, I mean, at the end of the day, if you don't believe in Bitcoin, or you don't think Bitcoin's going to go up, these don't make any sense, right? They're going to be more volatile on top of Bitcoin. And so you do have underlying Bitcoin risk. Whatever happens to Bitcoin will adversely affect these companies too. From a corporate perspective, I think the biggest risk is taking on too much leverage and trying to. I could see a lot of these companies trying to maybe to play catch up with the strategies of the world and trying to take on maybe adverse terms, adverse financing that works well in a bull market. But if we do have a bear market or a significant downturn in Bitcoin, these companies aren't going to be able to survive and withstand that. And so today, thankfully, the market looks very, very healthy. Most of these companies have very little leverage on their balance sheet. I think strategy currently, they're I think 10-1 covered on their prefs relative to the Bitcoin NAV. So not the company stock price, but the NAV of the underlying Bitcoin they hold. So the coverage I think right now is still very, very healthy. But if this trend continues and really takes off, and these, I guess to put it bluntly, Johnny come latelys try to play catch up, that's where you can get into some trouble with this. And so our view at UTXOs, you have to be very, very selective. Our main thesis is that it's probably going to be a winner take most in these jurisdictions. And so we're selective. We want to partner with the groups that are thinking 10, 20 years out, not 1 year out, not trying to get a quick buck and go off into the sunset. This is a long-term theme for us. And so, yeah, I think you just have to be very careful and be very cognizant of the groups out there that are maybe taking on a little bit too much risk.
And I know we'll have to move on in a minute, but is there a risk of contagion or anything like that? Like if some of the levered, like the new ones that are taking on way too much risk and like blow up, presumably too soon. Do you see a risk that people basically get scared and run for the exit?
Yeah, I mean, I think the biggest risk is seeing MNAV compression, especially in a bear market right now. A lot of these are trading at a premium to their Bitcoin NAV. In a bear market, a lot of these will probably be trading at a discount. And so I think the biggest risk is just if you own something at a high MNAV, high premium, that you'll just see that deterioration of price potentially. But in terms of contagion across the Bitcoin network, I mean, this is still such a small space. I mean, Strategy, like I mentioned, owns by far the most Bitcoin out of any of these corporations. And so
put a number on that, Loren. Like, is it like 85%, something like that?
Yeah, I think the total, I need to double check what the current number is, but I think it's only like 750,000 Bitcoin in total that these corporations own, and Strategy owns 630 of it.
Yeah.
So if you think about 750 BTC, there's 21 million BTC that will ever be in circulation. It's still really, really small. So I think the contagion effect, if all of these were to sell out of the Bitcoin overnight, obviously that would affect the price. But in terms of there being a contagion or an ill effect on Bitcoin, that's just misfounded right now, just because it's still so small. And then I'd also say that, as I mentioned earlier, the debt profiles on these are relatively healthy, and a lot of the debt is not tied to the actual Bitcoin. And so, like Strategy, they actually traded at a slight discount during the last bear market in 2022. It was only for about a month, where I think they traded at an 80-90% discount to their NAV, and they just did nothing. They just sat on their hands. They didn't sell any Bitcoin. They just kind of withstood the storm and withstood the pain, and then accreted the benefit on the other side.
Bringing that back to the squeeze comment, they own it. And the thing that when you bring up debt, if you're a Bitcoin treasury company and you're an investor, the question is, when are you forced to sell? Like what you said, Bill, contagion is a growing, downhill avalanche of selling. But if you don't have to sell, if you have matched your liabilities to your, by pushing out it's permanent capital for most of the equity. And then the preferreds are effectively permanent capital with some maybe income component, but not always, because it's in kind. So the structures are stable. The question is the performance. And that's why you need guys like you and firms like UTXO to delve into that. But this is not a huge problem from a structured standpoint, as you said, it's less than 5% of the entire Bitcoin stack across everybody. And we've had bigger concentrations in the past that have blown up with, Mt. Gox and other things. Bitcoin survives, price goes down, price goes up. So anyway, that's just my quick 5 cents on, is it an immediate hand wringing, wave your hands in the air? No, it's not.
Right. Agreed.
Another question that came in is VTC, virtual currency. I think we may have said BTC, or did we say VTC? I don't know if we introduced a new acronym or not.
We did not.
Yeah,
I'll
I think it was
work on my New York Lisp.
So Techito, BTC is just the symbol for Bitcoin. So a lot of people say BTC rather than Bitcoin. And then I guess one follow up to the short squeeze question then that I will add is, what is the Widowmaker trade? Maybe for you, Mark.
The Widowmaker. Well, I guess I don't have a specific answer. You may have a one. I remember in the old days, they'd say, shorting coals was a Widowmaker, because it would persist, even though it was a terrible company, you couldn't kill it. But as far as the Widowmaker in general, I don't have an answer. Which one are you going after?
I think that's generally it. The company that it isn't necessarily a short squeeze, but it's the one that keeps going up and up and up. So I had a friend that I think he was the only analyst who had a sell recommendation on Tesla, and it was based on the quality of Tesla's balance sheet. But if you had sold Tesla short and were holding that for a long term, that would probably put you out of business.
That would be the Widowmaker.
Yeah, I think of the Widowmaker trade as, anything like that. Like, your thesis could be good, but you might not survive a liquidity crisis, or in that case, a just very, very long-term rally that ultimately becomes a self-fulfilling prophecy. If you can still access capital markets like you can with, I think that some of the criticisms of strategy and its leveraged Bitcoin premium are somewhat valid, and I think that we've seen a lot of different things like that. Access to the bond market and that huge box there, that's a very helpful visual for, I think, people like me to understand what they're doing. But that certainly would be another example. I think if you were shorting MicroStrategy for 5 years based on that, what could be a decent thesis, it would probably put you out of business.
If your analyst who's shorting MicroStrategy, folks, comes into your office and says, sounds like Vicini from Princess Bride saying inconceivable. It's inconceivable that MicroStrategy is trading at 2.5 times.
Yeah.
I've been doing analyst work forever. The numbers don't add up. And in the old days, we're like, okay, then sell it to the model. Too bad, life happens. And you might be missing something. So that's why stop losses and guys like Bill and I were risk for a while would come in and be like, great idea, time to put it to bed.
And thank you for bringing up Princess Bride.
Growth rate of Bitcoin, right? And understanding Bitcoin from a first principles perspective. If that analyst doesn't understand Bitcoin or doesn't get it, he's just on a different planet, right? He's not even in the right hemisphere trying to understand or underwrite MicroStrategy.
Yep.
And yeah, just one last anecdote about my friend. At his bank, a lot of the senior bankers would kind of show him pictures of their Teslas and stuff and be like, yeah, this is back when Teslas were a little more rare, and I think they were all giving him a hard time about
a little
the Teslas that they were all buying.
Man, that's why I stopped being short. Is a like catching lightning in a bottle. And ever since the Fed went full bore supporting markets, there's just so much speculative money around. You can't even, FTT, Sam Bankman's stock still has $300 million worth of value into it, even though it's not only dead, it's, it's a decrepit testament to debauchery, and it still has a $300 million market cap. So yes, shorting is perilous. Being long things that are scarce and resistant to attack and all those other things that Loren knows about might be a good place to start looking.
So I think we're at about the hour mark, and we should probably get to a few more questions with Loren and wrap it up in the next, 5-10 minutes.
Okay. So Loren, you're head of capital formation. If people want to get some information from you, even if they're not institutional, but you guys are kind enough to share slides, I believe, with plebs, and as I like to call us, people, the unwashed that don't really know what's going on. Where can they reach you?
So a few different ways. Our website, UTXO.management, we have information there, and then we have a type form there if you want to reach out and have a specific question. We'll try to get back to you. We also have an X handle at UTXO Management where we try to update just things that we're looking at and what we're focused on. And then feel free to reach me directly. My email is Loren, Loren at UTXO.management. And so, happy to answer any other questions that come up. We're, to your point, Mark, we're very much in the business of educating on Bitcoin, just given our roots and the conference business and the magazine business. We love doing that. That's really the first step at the end of the day is education and knowing what you own and then making your own independent decision on that. So happy to help where we can.
Good stuff. All right. I think that's a wrap. Loren, great to have you on again. See you. And I'll see you tomorrow at what's the Bitcoin Park, or is that the Nashville
Bitcoin
event?
Park. That's right. Yep.
Good. We'll be down there with
Thanks
you
for
and
having me
Chain.
on both. I really appreciate this. This was a lot of fun.
Good.
Are you
good.
guys meeting in a parking garage or what's the venue there?
No, it's nice now.
So
right?
so Bitcoin Park is a just real quickly is a grassroots community center, house effectively where Bitcoin companies, developers work out of in Nashville. And it was actually the old Florida Georgia Line recording studio. So that famous country pop band. And so there's definitely the Nashville country roots, freedom roots, and then they continued on with some Bitcoiners coming in and starting that. So they do a lot of open houses, and it's open to the community for people who want to learn more about Bitcoin. So if you're ever running through Nashville, or if you're based in Nashville, I know that they're open to having folks coming through. So
Cool. Yeah, and so that's going to be, I think, 7:00 tomorrow night in Nashville, Unchained. I'm speaking with Jonathan Melton, who I've known for a number of years, and he's going to talk about borrowing against, not lending, no, don't lend, borrowing against your Bitcoin in a nice setting. So we'll see you then.
Yep. See you there, Mark. All right. Thank you.
All
both.
right. Cheers. Thanks
care.
all.
Bye.
Yeah. Okay. Looks like
I ended the stream on